Welcome to Margin for Mission, the CRI Cape and Krause podcast, where two friends, Ken and Chris, bring you real talk about creating space for what matters most. Because when your organization has financial and operational margin, you can focus on your mission with confidence.
We're professionals who've spent years helping churches, higher education institutions, and other mission-focused nonprofit organizations manage their accounting, tax, compliance, and other challenges. We understand the complexities you face, and we're here to make it simpler.
In each episode, we'll dive into practical insights on leadership, operations, and the everyday challenges of running a nonprofit without the jargon.
And we'll talk about life, too. Family, faith, quite a bit of football, and finding balance in a world that rarely slows down.
So whether you're managing budgets, leading teams, or just trying to keep your mission moving forward, you're in the right place.
This is Margin for Mission. Let's get started.
Well, Chris, here we are. Another great time for us just to get to connect again. How are you doing over there, sir?
You know, it's been a journey. It's been a journey, Ken. So I caught the flu, just like, you know, the
Half of the
100
country.
million. Yeah. We should have just like taken the first week of January off.
Yep.
Like it was an absolute mess. I like to say that it was like toddler temperatures. Like I was seeing numbers on that thermometer that I haven't seen since I was a wee lad. So it was touch and go. But you know what the funny thing is? So I got it, and I was out of commission for like 4 days. I'm thinking about updating my will. Got to make sure that our kids are well taken care of. And then Christy, my wife, she just kind of got it, and literally the lady was out for like 4 hours, and then she's back up and at 'em and taking care of business. So
Yep.
I don't know what that means. I think I just got like the significantly worse version, because surely I am not that significantly weaker than she is. Surely not.
Absolutely not. But you know, there's always that stigma we get as guys whenever we get sick that we're just always out for the count and completely useless.
That's
But
right.
we're so grateful to have some amazing ladies like that are able just to muster
Amen,
through it.
Amen. Amen.
Well, I know even as I even think about just some of the uniqueness of getting into the new year, where, you know, we talked about it even with the big why about fresh starts, all these types of things. And I feel like for me, and I know we'll talk about where I'm at this time around, but I need to have a confession related to this episode, Chris.
Safe place.
Yeah, I hope it is. I really hope so. Because if not, I mean, I guess we'll have a new speaker for the next podcast with you, Chris.
Just too raw.
It's my time just to open up a little bit. And so part of this is, as you know, I'm a CPA. And a lot of times there's a misconception about being a CPA. And I'll admit that for the first couple of years when I got my CPA, I was deep into public accounting as an auditor. And everyone would be like, "Oh, how are you doing?" I'm like, "Oh, it's just been so busy." And I'd be like, "Oh, I can only imagine." And before I can explain, they'd be like, "Because of taxes, right?" And I'd be like, "Well, I'm actually not a tax CPA. What I do is I do audits." And then they're asking, "Well, what's an audit?" And I'm going off about, "Oh, well, I do the substantive testing, I do test controls." And 30 minutes to it, I realized that by minute 2, they've already glossed over. You had that look like, okay, they didn't understand it. And I kept doing this where I just kept, to an extent, playfully or at least nicely admitting, I was like, "Hey, I'm actually an auditor." Well, probably by the 5th year going into this, of people saying, "Oh, you must be busy because of taxes," I finally just broke and I said, yes, because of taxes. And so I just want to really like get the elephant out of the room that I am a CPA, but I am not a tax CPA. But the thing is, a lot of folks think that because you're a CPA, you probably do taxes. And so
Automatically,
right?
Yeah. Well, to the extent that I can provide absolution, Ken, you are absolved.
Thank you.
And set free from any guilt or shame that you've been carrying around.
My wife is the tax CPA. You do not want me to be your tax CPA. So that's how I really want to say it there. And we've been going on with this type of thing about where's Ken this year? This year, right? But where's Ken this time around? And Chris, it's been pretty fun. I am in a different place. And so my hope is to give you a couple of, let's say, hints about which city I'm at.
It's a great game.
So let me know when you're ready. Are you ready?
Okay. I'm bracing myself. Yeah. Let's get the juices flowing.
All right. So here's a couple things about this particular city. So it is known as Rocket City. is a high-tech hub that is tied to NASA, and it is also considered as the first incorporated town in the state where the first constitution was drafted. They have a minor league baseball team called the Trash Pandas. And it's one of those things where, yeah, you start to hear some of those things, right? The hotel I was staying at was actually near the Trash Panda Stadium. And I was like, oh, that's pretty cool. I never thought about another term for what a raccoon was. It is in an area that could be heatly contested in terms of the fan bases of either a War Eagle or a Roll Tide. And so I'm not either one of those, just because, as you know, I am a Georgia Tech fan and Indiana is a football team again, right? So we just need to emphasize that. So where do you think I went, Chris?
Man, some really good hints there. It's almost like too many. I'm thinking about like Rocket City. That's a really big one. Roll Tide. So it's the football team formerly known as the Alabama Crimson Tide.
And then we lost
the Hoosiers.
Half of our subscribers now, Chris. But continue.
Hey, it's not their fault. They ran into the buzzsaw known as the Kurt Signetti effect. And in Alabama, well, so this is a small world kind of thing. But I actually have some family that is in Rocket City. And that now lives there. In fact, my brother and his family are in there. It is just across the border into Huntsville, Alabama.
Boom! You nailed it right on the head.
So
are you town?
It is a pretty little town. Are you taking the boys to space camp?
Oh, we will soon. I know, because we have matching space suits, courtesy of my sister-in-laws, because they all work for different space programs. And so that kind of shows they want to be the favorite aunt. And as a part of it, they have been buying some of those space suits for the boys to wear. And it's completely cute. And then I'm just like, you know what? Let's just continue. Let them enjoy this, right? And if they get to go to space camp, they get to go to space camp. And luckily, it's only 3 hours from Atlanta. So
that's not bad, man.
It was a fun time.
Are you guys just there for like family vacation / a little bit of work, or what's cracking?
It was a mix of both. Had to get some meetings done, but then of course just trying to spend some of that family time. I know we touched on work-life balance, or if it'll be for an upcoming episode about work-life balance, and we really want to make sure that works, especially since our boys, Brittany homeschools, and so it's a fun thing for us just for them to be able to tag along when we can let that happen.
Man, that's really cool. That's really cool.
Well, I have another exciting thing to share too, Chris. Right? I think we have our first sponsorship, and it's in line with the episode, right? It's called It Depends, sponsored by Depends. I'm just really kidding. But if Depends is listening, we will Chris will gladly market for us.
That's right. I'll support the Depends. That's right. True story here, Ken. So one of my childhood idols growing up was Deion Sanders, right? So it's Coach Prime of the Colorado Buffalo, and he is now sponsored by Depends because, and this is the sad part, he had a surgery for some for bladder cancer.
Yep.
And so he had some incontinence issues, as they say in the biz. And so he was rocking the Depends, and he was trying to destigmatize incontinence issues. And so Depends was sponsoring Coach Prime. So there you go.
Hey, it's part of it. There's a reason why they're in business, and it's not at all meant to shame, right? It's saying
that's right.
There's something where we want to make sure we can help honor, especially folks as we get older and all that. There's something like that, a product.
Amen, brother.
But as we continue, I think that the topic, even the title, I think really is relevant for us, because as both a CPA and a lawyer, there's a lot of times people are asking us questions, especially in the ministry world, about, oh, how about this scenario? How about this scenario? And it's not really a yes or no. It actually ends up being, well, it depends. And so that's where, I'm so excited that you get to be the one that talks a lot about this. And let me just preface a lot of folks that with how Chris presents at a lot of our conferences and presentations, people have come up to me and said, man, Chris makes taxes interesting. And I'm like, you know what? That in itself is a whole level of just raising the bar, because who needs melatonin when you talk about taxes? And so that's where part of it is, Chris, you get to make it interesting. And so love to hear some of the things that you've you've thought about just from the tax side, because that's what you do day in and day out. And I think for the folks listening, I think they'd love to hear a little bit more about what Chris does to make it so interesting.
Yeah, yeah. Well, that is high praise to hear that people to hear that people think that tax is interesting, and I don't think it's anything that I in particular do, but I think that I bring a level of interest to the
Yep.
table. I am genuinely interested in the world of tax and as it relates to ministries more particularly. I think also too, and we talked about this during the Big Why episode. Given my background in the nonprofit world and kind of living and eating and breathing that air, and just understanding how complex and
Yeah.
nuanced and weird it can get, I think just having that kind of in the background too helps. But yeah, I am a lawyer, but I'm a lawyer at a CPA firm that does tax consulting work, and so this is stuff that I interact with on a daily basis. And I kind of figured that maybe a good place to start would be to say, hey, it's January. It's a brand new year. We're thinking about what has gone by. We're thinking about the future.
Yeah.
What is 2026 going to look like? And are there any kind of like year-end tax-related things slash things in early 2026 that we should just kind of be aware of and have on our radar? And the answer is yes. The answer is yeah. You really should. The good news is that if you're a ministry, you don't have a tax return filing obligation. Usually, sometimes you might have what's called a 990T if you have
Yeah.
unrelated business taxable income, which we can talk about that. What does it look like to operate an unrelated business, and what are some of the more normal run-of-the-mill unrelated businesses that we've seen, slash what are some of the more exotic things that we've seen out
Yeah.
there in the wild? Um, but also like payroll tax reporting. So, making sure that your 1099s are sent to the recipient at the right time and with the right amounts, and the W-2, same thing. We do have some ministries that do file a standard issue run-of-the-mill 990. So not a
Yeah.
990T, but a 990, just an annual information return. Not traditional for most religious organizations, but we got a lot of folks that still decide that they want to file that. And I suppose that maybe now is a good time to talk about, okay, we've talked about 1099s really quickly, W-2s really quickly. What determines whether a person should receive a 1099 or a W-2, right? And so,
Yeah.
Ken, you work with churches all the time, and I'm
Yeah.
sure that this question comes up. How do I determine whether someone's an independent contractor or an employee, right?
Oh yeah, and there comes that question. The answer usually is it depends, right?
It
And you
depends.
start to talk about it even more. And they always want to have a quick yes or no until you're just like, well, you may not like the answer, but I need to explain why.
Yeah,
And that's
yeah.
where you start to see that piece too. And that ends up being a very, very prevalent question that keeps coming. So what's a 1099 person versus a person that could be a W-2?
Yeah. And the hard part here is that the IRS is not quick with coming forward with bright line rules like, hey, if you pay a person 2 times over the course of the year, then that means they're going to be a W-2 as opposed to a 1099. But that hasn't stopped churches from trying to create some kind of bright line rule, right? I've
Yep.
got I've got one church, very prominent church, very big church, sophisticated church, lots of solid professionals in management, and they just got to the point where they were like, listen, uh, we can't go through the nuanced analysis of what kind of worker this is every single time. So if we pay you 3 times for things, you're officially an employee. Congratulations. And you're going to get a W-2.
Yep.
Now, there's nothing like particularly wrong with that. It's a little bit it's a little bit to the side of how the IRS likes to do this. Back in the day, it used to be that the document that you would give to an organization that kind of tease out whether a person was an independent contractor or an employee was a form SS4, the form SS4.
Yeah.
And this is the document that an employee or an independent contractor would send into the IRS to have the IRS determine if they were an employee. Okay. The thing's got like 22 factors on it for determining whether someone's an independent contractor or an employee. It's bananas.
Oh yeah.
And so you'd have like employers going through this and saying, all right, I exercise a little bit of control over their work. They don't get benefits, they don't get time off, but I do have them have
You have a
a
space
church
for
issued
them.
laptop. Yeah,
Yep.
that's right. I got space for them. There's a little bit of training, all the way down the line. And then, you might have like 10 on one side as an independent contractor and 10 on the other as an employee. And then you're just back where you started. I don't send people to that anymore.
Yeah.
Thanks be to God. What I do instead is the IRS has IRS Publication 15A. IRS Publication 15A has a really solid discussion about whether a person is more faithfully classified as an independent contractor versus an employee. And it's in English.
Yeah.
It's amazing. And it's not long, it's not tortuous. You don't feel like you're getting all lost and twisted up in the verbiage. Like it's pretty clear and concise. But it boils down to a few big ticket items. Number one, do you exercise some kind of behavioral control over the activities of that independent contractor / employee, over the worker? That's the general term. And so are you telling them when to show up? Are you telling them how long they need to show up? Are you telling them, hey, here's how you do the job? Are you giving them training on that job and that kind of stuff? And then number two, are you giving them benefits that are commensurate with an employee, such as health benefits, PTO, flex time off, sick time, like the normal things that you would normally associate with an employee relationship? And then last but not least, one of the things that came up in our research doing this was the IRS really likes to see whether there's a risk of loss. So if you're a person who like runs your own business, and you actually bear a little bit of risk of loss, then that is going to push you more into be considered an independent contractor as opposed to an employee. And it turns out that's a really big deal to the IRS. Do you bear a risk of loss? Do you bear some kind of substantial benefit or detriment depending on how things go for you? So that's another big one that's out there in the mix, and is really helpful.
You bring up some of these points that, to an extent, a lot of times you start thinking about a lot of churches like to go the 1099 route because it is easy. You're not having to withhold.
Oh, yeah.
You just essentially send that report and they handle it later. But as you start peeling the onion, per se, you start realizing there's actually a level of control and a lot of things that ultimately it may be the safer route of going the W-2 route because of just the fact that, at least in that case, you're handling the taxes piece and all. Sure, it may be an extra couple of steps, but it helps kind of keep things a little bit straightforward and clearer for me versus just saying, well, it's going to be a big climb to really make sure you can show that everything here reflects that this is a 1099 contractor. And
oh yeah,
I think it's always going to be a prevailing question every time, because again, this is where you start thinking about the uniquenesses of the church too, and with it comes also leadership that has a fairly more visionary mindset as opposed to the administrative, which is completely fine, right? That's why there's that healthy tension between the senior pastor and even an executive pastor and their operations team of, okay, here's what we see, but how do we make sure that we keep things not just compliant, but just help prevent any potential risk for us as an organization while we continue to further his kingdom.
That's right. Yeah, trying to be above reproach, trying to make sure that you're doing things in a compliant manner is huge. But you're right. Sometimes senior pastors / youth pastors, they're just not really in that headspace. And so having an ex-pastor or an administrator who can communicate well with those types is super important. Yeah, one of the things you said kind of made me think through what are the most common scenarios where I see the worker classification thing pop up. And the two big ones, and maybe you've got others, but the two big ones where I see it are, number one, childcare workers.
Mm-hmm.
So these are the people in your nurseries and that sort of thing. And then number two, worship band, gig
musicians.
Workers. Yeah. I don't know if you see it in other spaces and in churches and, nonprofits more generally, but those are usually the two that are the repeat offenders.
I completely agree with you. I think a lot of it usually it goes into that worship leader or the musician as to saying like, well, they only come in on Sundays and then they come in, they do their practice, they have their own guitar, they have their own equipment, and then they leave, right? And you're like, well, I think I can see that. And then of course the child care employees, well, let's say whether employees or contractors, there's a
Yeah.
lot of that section there where you start thinking about, well, it may not be clear cut, yes or no, but let's walk through it to see which makes the most sense. And that's where I think this is why this podcast is so relevant for us whenever we talk about this, because there are uniquenesses to a ministry as well.
That's right.
With it comes unique questions too. And I think, one of the things that we'll probably talk about are some of the unique questions we have probably seen in this area. It's not meant to shame, it's not meant to make fun of anything, but just saying, look,
Absolutely
we
not.
get it. There's probably some things here that you just want to ask what makes sense from a tax perspective. And we'll talk about some of those examples too later as well. But
Kim,
keep
we've
going,
got
Chris.
some creative people in our churches and ministries who
Yep.
who sometimes try creative things.
Yep.
Thanks be to God.
And thankfully that's not us, because as accountants and tax, at least accountants and lawyers, I've always said, like, we keep creativity out of this, because accountants, when you get creative, you go to jail, and it's so much more fun being outside. So
That's
I always
right.
like
That's
to stay
right.
that route.
Yeah, it's really sad, but the law school that I went to, there was the atrium area was named after a lawyer who got a little too creative, and the atrium kind of had to keep his name. And after he had been disbarred and all that kind of stuff. Now I think they've changed the name of the atrium since then because of they're like, hey, we can't keep doing this. But yeah, same for lawyers. We can't get too creative, or else we're gonna get in hot water.
And that's where I think part of it's like, this conversation, it ends up being pretty much a recurring topic, is the tax piece, because part of it is essentially saying, look, we want to make sure you can properly document it. We want to make sure you can help justify something if it is a consideration, so that you could sleep well at night. And that's where part of it is the case here, is, again, not trying to be the hindrance, but we do want to help navigate and make sure things are being done well. So you don't have to worry about saying, okay, is someone or an organization going to knock on my doors and question this, when we have actually vetted it, we've walked through it and talked through it. And this is why we believe that this stance makes sense.
Yeah. Yeah. So another kind of year-end, beginning of year sort of question is, well, what about contribution receipts? People are kind of two different minds when it comes to contribution receipts. There are some that say, hey, anytime a person gives us a contribution of any size, they're going to get some kind of contribution receipt, whether it's an email that's auto-generated, or an actual letter that comes from the ministry to the person saying, hey, here's the date of your contribution, the amount of the contribution, etc. So that's one option. Another option is they just kind of keep a running tally of all the contributions that are made by that person over the course of the year. And then sometime in January, they give that person a contribution receipt for their tax. And then there's some that do both, kind of like what we call in the biz a belt and suspenders approach. It's like, hey, we're not going to do either or, we're going to do both. I think there's something to commend to all of those approaches. But the one that you have to have is, if you have contributions of $250 or more as a donor, you must have what's called a contemporaneous written acknowledgement of that contribution in order for you to claim that as a potentially tax deductible gift on your income tax returns. That's like the bare minimum. That's the absolute rule. And the contemporaneous, you have to get it before you file your taxes. So it's got to be in your records. It's got to be in hand from the charity before you actually go to file your taxes. So that's why you usually see those come out in January.
Yeah.
Because a person's not going to file. I mean, I'm going to file mine April 14th. So a little bit
Look
early
at you,
this year.
Chris. Just absolutely studious.
Bright and early. So it's making sure that it's done before the donor actually goes to file their tax returns is the rule here.
Well, I think the phrase I learned back in my auditing days still applies here, about if it's not documented, it's not done. And that's where part of saying you want to have the documentation, you want to have it retained. I will say, and you start even thinking about the contributions and even just the reporting piece, I think maybe, Chris, you might agree with me with this, but even from the ministry side, whether it's a church or a mission organization, it will probably be good for you to make sure you have some type of gift acceptance policy, because even in some of those instances, again, I love the charitable giving, because, start thinking about it comes from the sacrificial heart of most folks. And I say most because there are some unique gifts that we have seen. and this is where part of it is that as an organization, sometimes you're willing to say yes. I do know the probably one of the most unique gifts that I've ever seen a nonprofit ever receive was a mobile home park, and actually, an occupied mobile home park. And before they could, the CFO I was talking to had just joined when he found out about, oh, this organization accepted a mobile home park as a gift. Now they have to deal with, okay, how do you handle the tenants? Because it was actually a mobile home park in another state. So it became a lot more complicated than just recording and the value of the property. So that's where I was just saying, like, look, it will be great because I'm sure it's a great property as well eventually. But I think
I'm sure.
organizations need to be mindful of what they're willing to accept. Don't you think, Chris?
I absolutely agree. A gift acceptance policy is really really key, both for internal people who are like accepting gifts. Because you're right, like you want to say yes. It's
Yeah.
a quote unquote free gift. How could
Yeah.
you say no? But at the same time, if it's going to come with those kinds of strings attached, and you're going to have to manage the property and or figure out how to dispose of it in
Yep.
some way, then yeah, it may be more trouble than it's worth, for sure, for sure. And maybe it's a gift that is coming from someone that you're like, man, I don't really know if we want to be associated with this particular person or this particular
Sure.
company. That does happen. Um, Although I will say this, I used to be a fundraiser back in the day, and I was in a fundraising training with a dear sweet nun, and she goes, I could take money from the hand of Satan himself, and I would apply it to the Lord's work. And I was like, well,
You know?
hey. So there's definitely different philosophies on accepting gifts from particular people and particular organizations, for sure, for sure.
Sure.
But yeah, having that gift acceptance policy in place, both for your internal people, but also for your external facing folks, so that they know what you'll accept,
Yeah.
what your process is, what you're more liable to say no to, and that sort of thing is really key.
Sure. And even the communication of the gift itself, because, I think there's
Yeah.
a lot of times you and I have seen it. Of course, again, this is where you've seen it from the fundraising side. If you have a donor that has a heart to give towards a particular area, that's perfectly fine. But there are times where it could be absolutely restrictive, that it actually becomes more of a burden. And that actually has been some of the things I had even seen, even my own uh, controller days at my previous organization, where we were trying to figure out, why do we have this fund since substantial, even before I was born, that is towards the repairs of organs, like not the organs in your body, but
Like the
the actual playing organs. And you're like, well, we don't have any organs in our office building, so we'll try our best to donate it to a church that does need it within the denomination, right? And so that's where you start to just see some of the things of saying, like, let's see if it also makes sense from the gift side of what's being there. Because sure, we'd love to open up all these, whether it's benevolence funds and memorial funds and certain things for particular purposes. But there's a lot of times that if it becomes so restrictive, it actually becomes more of a burden, because you're having it to be tied so particularly for this one thing too as well.
Yeah, yeah. Well, let's use this opportunity to talk about something you just mentioned offhand,
Yeah.
but I think it's really relevant, especially in the church space, and that is benevolence gifts.
Mm.
Benevolence gifts. So there's all kinds of questions that surround benevolence gifts, but for those who may be kind of aware about what benevolence is, but maybe just need a little bit more of a refresher, a benevolence gift is a gift made to those who are needy or distressed. That's language that the IRS uses, so
Yep.
forgive me, but needy and or distressed. And that can be a case of temporary need. Maybe there's a temporary job loss or something like that. Or it could be more chronic, where maybe a person has some kind of disability and they're just not able to work, or whatever the case may be. Those gifts made from the church to that person are not considered taxable income to that person. So that's an important first step to note, and that comes from, I'm going to say, an Internal Revenue Code section. So watch out.
Hey, I'm going to cover my ears now.
Internal Revenue Code section 102. 102 talks about gifts made to people and says that those are considered non-taxable. But then you sort of shift to the side and you say, well, is there ever a situation when there might need to be some kind of tax reporting due to a benevolence gift? And this is where I'm going to mention our sponsor. Actually, not a sponsor, but kind of a sponsor. Could be a sponsor.
Could be. Hey, again, we're willing to accept that.
That's right.
We'll make sure it's properly organized and represented.
That's right. It depends. It
Mm.
depends. If you as a church maybe have a policy that, hey, we try not to give benevolence contributions directly to
Hmm.
benevolence recipients. We'd rather send the check to, let's say, the light company, or maybe give them food itself, or maybe if it's rent, we want to pay the landlord themselves, as opposed to giving that cash to that person. Totally get that.
Yeah.
That's just part of your policy. Um, there may be a situation where you need to provide that landlord with a 1099 because maybe they're not a corporation. Maybe it's just an individual. Well, they're getting funds in the course of their business, which is operating as a landlord. So therefore, they need a 1099. Um, so sometimes churches will ask that question, like, "Hey,
Yeah.
do I need to provide a 1099?" And what I always tell them is, for the recipient, no. If you're sending cash to third parties to make payments on behalf of the recipient, the answer is it depends
It
and maybe.
depends.
So maybe get a W-9 to make sure that, hey, I don't really have a 1099 obligation here, but it's something to really consider.
Sure.
And then one last issue that I just want to throw out there is, can employees receive benevolence?
Mm. Good
And
question.
yeah. And the short answer is they can. They can. If you've got an employee who is in really hard, let's say, medical straits, or there's another financial issue that just popped up, or their car broke down, or whatever it is, you could give them something from benevolence. You really could, but you have to include it in their taxable income. And that's because of Code Section 102C. Code Section 102C, that's in the same big section that deals with non-taxable gifts to individuals more generally. But then you go down a couple steps to 102C, and 102C says, hey, this doesn't apply to employers and employees, because it just shuts the door on non-taxable gifts from employers to their employees. So something really important to consider there. Yes, you can, but just know that it's got to be included in the taxable income.
Yeah, I think that employee question keeps coming up a lot of times, even in
Yeah,
ministries too, because that's where part of it's essentially saying, like, look, we see where the hurt is and we want to
totally.
make sure we can help. But at the same time, we want to stay above reproach. And that's where part of this is, as you can tell, a lot of our questions aren't a simple yes or no. It's a, let's just make sure we understand the circumstances because it could depend. And then part of it is, how do we make sure we go the right process to stay above reproach too as well?
Yeah, yeah. No, it's good. That's really good. Um, there was one more thing that I thought about in the context of year end, year beginning, and we can move on to
Yeah.
some other aspects of the wonderful world of tax, and that is ministers' housing allowance designations.
Fun one.
That's right. That's right. That's right. Um, Ken, it never ceases to amaze me. The wonders never cease. A church can be really sharp in a lot of different areas. And again, this is no slam. This is
Sure.
no shame. But for some reason, there can still be like a nub of misunderstanding regarding how to do the minister's housing allowance in various ways, right? What should a W-2 look like? What should
Yeah.
payroll look like? How do you designate the housing allowance? The reason why I think it's important to think about it year end, year beginning, is because the housing allowance amount must be designated in advance of payment. For those of you who aren't aware about how ministers are special, unique unicorns in the world of payroll, they occupy what's called a dual tax status. They receive a W-2 like just a normal employee, but they are anything but a normal employee. They're subject to what's called the SECA tax regime, as opposed to FICA, and so
Yep.
their W-2s are going to look kind of goofy if you're looking for the normal employee kind of stuff. But the big benefit is that they receive they can receive what's called a housing allowance amount from their employer, and the designation must be made in advance of payment. So sometimes the way this can go awry is, let's say a church brings on a new minister and then forgets to make the designation in December, and then they move forward in January, February, March, and then March rolls around, and then someone picks up on the fact that, hey, this minister, they're entitled to the housing allowance, but they're not actually getting it. And here's the big benefit of the housing allowance. The housing allowance amount is excluded from gross income tax, though
Yep.
it is subject to the SECA tax. And so this person, like, they say, well, can we just go back and designate for January, February, and March because we just kind of missed it. And I have to be the bearer of bad news, which can, as you can tell,
Yep.
that's not really something that I really
It's
super
not
duper
fun,
enjoy.
right? Really not fun. It does not
It's really
spark
not
joy.
fun. It does not spark joy. That's right. And so you have to say, well, unfortunately, you can't. You can't. You can only designate in advance of payment. And so it's only for qualified housing expenses after the designation happens. And so only from March going forward can you designate a housing allowance amount. So that's really important to keep in mind. You should probably have some kind of process in place that every December you've got your ministers, they've turned in their ministerial housing allowance worksheets.
Yeah.
You've walked through those and you have some kind of process for either the board or the elders or the deacons or whatever your polity structure looks like to go ahead and make that designation. And then you can kind of move forward in confidence,
Sure. And
knowing that you're covering those house expenses.
you brought up another thought here that, some of the questions, and I'd love to get your thoughts on this too, is that, sometimes the church will ask, well, what if the pastor is provided a parsonage versus renting versus them buying a house? What are some considerations there if there is a parsonage available as opposed to the pastor has to find a place to rent or to buy?
Yeah. Yeah. A parsonage used to be kind of the main way that a church would provide housing to its minister, right? Those are kind of
Not
going
as
by the
common
wayside
nowadays, right? Not
Yeah.
as common, though. I want to
Yeah.
preface that, but we've seen a couple just
That's right.
pop up.
In fact, like my church, we have a parsonage, and our youth pastor lives there. And it's actually a really great relationship for both of us because we have a house that's now occupied by, the minister and his family. He does not have any, doesn't have to really worry about that. It's taken care of by the church and that sort of stuff. Now, there's some downsides to that, right? He's not building equity
Yep.
in a piece of property, which is kind of a bummer. Is definitely a consideration for ministers as they get older, trying to make sure that they have access to real estate equity and that sort of thing. But by and large, it's good. Now, what are the considerations here? The first one is that you have to figure out what's the fair rental value of that parsonage, because the fair rental value of the parsonage will then be included for the purposes of the SECA tax. Still not subject to the income tax, because again, it's the parsonage, so it's just like the housing allowance in that way, subject to the SECA tax. And on top of that, if the minister has any expenditures that they make on their own, then that can be designated as a housing allowance. So for instance, let's say that he's living in the parsonage and you decide that the fair rental value of that per month is $1,000 per month. Well, then you've got $12,000 in parsonage that's going to be in SECA tax territory, not gross income tax, but SECA tax. But then they pay utilities, they pay internet, they pay for, cleaning supplies, all that good stuff. And they say, well, I think it's going to be another $500 a month. Well, then you can designate $500 a month as housing allowance from their traditional compensation, reducing their traditional compensation, and throw that amount in the SECA tax bucket and not subject to gross income tax. So you can sort of double stack things a little bit that way to cover both the expenditures and the parsonage fair rental value.
Well, you start thinking about even just the ministerial tax situation itself. Think about the housing allowance and all that is a big conversation that comes up with a lot of churches, regardless of the size. Another one, and Chris, you may be already jumping into this one, but this was one that even my father had a lot of conversations with his fellow pastors before, was that pastors technically have the ability to abstain from taxes and from paying taxes as well, which is it's a hot button issue and a hot button topic in general, because that is a consideration, because that's their own considerations that they can do here. But there are ramifications, because it is essentially, if you're deciding not to go that route, here's what happens, as opposed to continuing, right? And Chris, I don't know if you want to share a little bit about that. And some of the pastors have asked that question before. We're not giving advice, right? There's the preface, but this is just saying, look, this is some of the things that we see a lot of ministers asking these questions, a lot of churches too, especially because that talks about the future and planning and retirement.
So a little bit of history here. It used to be back in the day, I mean, back before I was like even a gleam in my father's eye, that this is
Mhm.
how far back we're going. And I'm not a young man. Like the advice du jour was that ministers should go ahead and apply for exemption from Social Security and Medicare tax,
Yep.
right? That's another 15.3% tax. That's the SECA tax.
Yep.
And the idea was that, hey, you could just take some of that cash that you're saving and chunk it into some kind of retirement vehicle. So that way you can sort of take control of your own retirement destiny. Well, we'll talk about the claiming exemption and what's required for that and sort of the pitfalls that you were alluding to
Yep.
earlier. But leaving that to the side for a second, how often do you think it was that the ministers just thought to themselves, you know what, I've got this extra 15.3%
Be
amount
pretty
of money.
nice.
Yeah. And oh yeah, retirement. Oh, I forgot to open up that IRA 30 years ago.
Yep. Yep.
Happened all the time. And so ministers that get to near the end of their time of service, and they would realize that they didn't really have sometimes anything in
Yeah.
retirement savings. Sometimes they just have a little bit, and so they would think to themselves, "Holy smokes! Well, what can I do? Is there a way for me to kind of put the toothpaste back in the bottle? Can I like flip a switch somewhere and just say, hey, just kidding? I really do want to be subject to the Social Security tax, so that way I can get the 40 quarters, so that way I can get Social Security when I'm time to retire." And the answer is, once you claim exemption, it is really hard to jump back into the non-exempt space.
Yep.
You essentially have to change jobs
Oh yeah.
and do a non-ministerial job, and just get a regular gig. Now, let's get back to that claiming exemption.
Yeah.
When you claim exemption, you file the form 4361, and on the 4361, you're telling the IRS, I have essentially a conscientious objection to Social Security and Medicare. That's a really high
That's
burden.
it is. Yep.
So if you're going to say that, like you really want to think about it and be deliberate about it. Now, Congress has, over the course of its time, created like short-term bubbles where they'll say, hey, for those of you who claimed exemption, we're going to allow you to opt back in to the Social Security system. Usually it's for a period of 2 years or so where they'll allow for that opt-in. There is a bill that's just passed the House committee, I think, sometime in the last few months, called the Clergy Act.
Yep.
And the Clergy Act's kind of it's like a legislative buoy. It just kind of pops back up and down every year or so. Who knows whether they'll be able to make any hay with it this time around? But it's essentially another one of those moments where there could be an opportunity to opt back into Social Security, because if you are a minister who's worked for decades and you don't have those 40 quarters in
Sure.
order to get Social Security, it is tough. It is tough.
And I'll say, even just seeing it from, if I put on my church and denomination leader hat, I've seen a lot of denominations really advise against filing that 4361 because of the fact that they've started to see a lot of those ones back in the 90s that did do this. Now they're reaching that retirement age and they didn't save for anything. And now there's a lot of things about pastoral hardship and all that are saying, like, we have to really be mindful about being a good steward of the fact that, sure, you didn't have to pay that 15%, but here's the consequences now. It's for you to decide. We're not here to say yes or no, but here are some of the ramifications. Are you prepared to handle that, knowing that in the blink of an eye, 30 years can come very quickly, and here we are.
Oh, yeah.
Are we ready? Are we prepared to be able to retire in grace or not?
Yeah. Yeah. Amen. Amen. And then it leads to these kind of interesting situations where I had one pastor who reached out to us, and just a dear, sweet, man of God, faithful servant. And basically he was trying to figure out, can I like become a janitor at my church? Like not serve as minister anymore, not do pulpit supply anymore, and that sort of thing, in order to just get some of those 40 quarters. And yeah, so it's tough. Think very critically about whether you want to do that before you actually just jump into it, for sure.
Sure. I think about that. I think, it's interesting. We think about it's kind of a spectrum of what we see, because we have folks that talk about not being prepared for retirement, but then you also have the other side where it could potentially be overly generous, right? And I'm not trying to be at all judgmental, but this is where part of this,
That's right.
you and I, we interact with hundreds, if not as a firm, thousands of churches. And because of that, we see so many different scenarios, from the small 150 member church to a multi-campus, multi-location, 30,000 member church. And with it comes the consideration of what is reasonable compensation, right? Is this considered
Reasonable.
excessive for our pastor? Could they get a Cadillac and also thing that's being provided? Not saying that's an example we've seen, but that's where some of the things are just saying, look, there's so many different nuances, right, Chris? And that's where I'd love to get your thoughts, because I know our firm does a lot of these executive comp studies, and
Sure.
it ultimately ends up being the case of, okay, what is the right balance, right? It's always about balance, but we'll love to get some of the thoughts that you see in that case too, because that does have a tax implication too as well, doesn't it?
That's right. That's right. So maybe a little bit of the broader tax sort of context here would be helpful. So one of the things that a tax exempt organization, which a church is a species of a
Yeah.
tax exempt organization, is that they cannot engage in number one, private inurement. There's an absolute prohibition on private inurement. That's where you have insiders or quote unquote disqualified persons, people who exercise substantial influence over the
Mm,
organization, benefiting from that relationship. Big no, full stop, don't do it.
yep.
And you shouldn't have what's called private benefit. Now, private benefit is kind of downstream from private inurement. There's not an absolute bar on private benefit because, come on, you're going to have people that are related to the organization that get access to the organization's benefits. A really clear case is maybe a board member of the YMCA who is a member of the YMCA and gets member benefits of the YMCA. So you can
Yeah.
kind of see how these things are working together. Well, another subspecies in that world of private inurement, private benefit, is excess benefit.
Mm,
So if you got a person who is performing services for the church, they can get paid. They can get paid a reasonable amount, and that's absolutely fundamentally fine.
yeah.
But if you pay them too much, then that's going to be an excess benefit transaction, and that could potentially result in all kinds of like fines and fees and penalties, and sometimes even personal penalties against like the board of directors themselves. Like it can sort of starts cascading down. That sounds really bad, and it is,
Yeah.
and it is. So the question becomes, well, how do you avoid giving a minister quote unquote too much compensation? Now, a quick timeout. Can you and I both know that 9.9 times out of 10, we're not wrestling with churches that are trying to give their ministers too much cash.
Sure. Sure.
If
Sure.
they're if there are ministers that are listening to this, they're like, oh man, to have that problem.
I know. It'll be my burden to bear.
That's right. That's right. It's a hard one. So let's kind of keep that in mind. But
Yep.
it's one of those things where it does happen, and back in the great days of the 1980s, there were some pretty bad actors who had really big hair and were on TV who just kind of like ruined the game for everybody else when it comes to compensation. So you use the R word, reasonable. You can pay them reasonable compensation. Well, what is reasonable? Well, the IRS is not going to define reasonable for you, sadly. But what the IRS will do is they say, hey, if you follow this process, then that's going to be seen as like de facto reasonable. We can
Sure.
overcome that disposition to seen as reasonable, but it'll probably be reasonable. So there are three things that you can do in order to help make sure that whatever compensation you're paying is seen as reasonable by the IRS, at least initially. Number one, that you get, an actual compensation study done, or you do some work to see for ministers of that experience and education level, and for churches of our size in this metropolitan area, this is how much we usually get. So get some comps for how much to pay this person. Number two, that the board has some kind of deliberation, and that deliberation is actually noted in its minutes. So the board goes back and forth and says, yep, we like this compensation study, or hey, we got some questions. This is what we think. And then number three, that the minister themselves is not a part of that process of determining how much they're going to get paid. If you have those three things in place, then you've established what's called a rebuttable presumption of not excessive compensation. Can the IRS rebut that presumption? They sure can. But they have to marshal their own data in order to do that, which is kind of a tough road to hoe.
Sure.
So let's talk about what this looks like on the street, on the ground. Usually, Ken, I'm seeing this in the retirement context.
Mm-hmm.
I'll sometimes see it with just like regular annual compensation, but something happens, especially with long tenured, well known, so like published authors,
Sure.
that sort of thing, people who have been very visible, and or founding pastors, where there's been significant growth over the
Yep.
course of their tenure. Maybe they're like, hey, I started this thing in a coffee shop, and now we've got, to your point, we've got 6 campuses, and
We have 5 coffee shops in our campus.
That's right. One of which is called Hebrews. That's right. So, which every church should have a coffee shop.
They should. That'll be our next sponsor, Chris.
Oh my gosh, may it be. So that's right. It's one of those things where you've got a beloved, well-known, long tenured founding pastor who is now retiring. Can you give them a significant retirement gift? And the answer is you can, but just know that that's just going to be lumped in with their annual compensation.
Yeah.
And so if you have, let's say, $1 million in annual compensation and you give them a $3 million retirement gift, well, then you've bumped them up into a $4 million annual compensation amount, which could very well be unreasonable. Yep. There are ways to kind of work this, right? You can spread it out over the course of years. You could do some kind of rabbi trust. You could create some sort of other retirement vehicle, explore different options. There's things to kind of keep in mind and work through here. And this is where I'm not going to go into too great detail because it's way too nuanced. But it's one of those things where we have had cause to walk with several churches in this. And I want to share one more thing that's not really in the tax world, but more in the public relations world with this sort of thing. So one of the churches that we worked with, they had, again, long tenured pastor, well-known guy, published author, took the church from X to 40X. He received a significant retirement package from the church. Well, this retirement package leaked out to the congregation. And this is a Midwest congregation, all right, Ken? So I don't know how familiar you are with the Midwest, but we take great pride in not spending any money on anything. And so for this pastor to get this kind of retirement contribution was anathema for many people in the congregation, okay? And then it leaked to the press, and it became this really huge to-do where the church had to give explanations and say, hey, this is why we did this. We think that this is very reasonable, even though the number to most people would not smack of reasonableness for a church. You know what I'm saying? You and I get it because we work with ministers of very large churches. And so it was just like a firestorm, and the church wasn't quite prepared to field all those kinds of questions. So now, after that experience, what I tell churches is, hey, you should be prepared, whatever you do, whatever the amount is, to be able to have a conversation with your local newspaper, worst case scenario, but also your parishioners, should any of them have questions and want to discuss this.
It's one of those things like, are we ready to present something like this? And what do you think would we expect? And this is where there's this book, and we touched it in our fraud episode of the greatest question is, what is the wise thing to do? And it is something that even as a church, right, it's not saying we don't want to bless our pastor. We want to take care of them because of what they have done. we have to make sure we do it where it is above reproach, where it makes sense. Because ultimately, Chris, you and I know pastors aren't making a million. Majority of pastors are not making $1 million a
That's
year,
right.
right? And they don't have those substantial things. They are having to do a lot of sacrificial work too at the same time. But as a church, you're trying to find that right balance. And this is where some of these conversations come up so frequently for you and for me, is because these questions are so pressing, especially for their leadership too.
Ken, one of the questions that I do have, and I don't know if you have experience with this, but churches are constantly looking for like rules of thumb for how should they think about compensating their ministers.
Yep.
Some say, well, we're going to look at what we pay, say, our public school teachers, or we'll look at what's the area median income for our area, and that'll be kind of the amount that we pay our minister. Are
Sure.
there any like particular, I don't know, rules that you use or that you think through when talking to churches about this?
I try to approach it of it is a case by case basis, but you try to think
Sure.
about what is the cost of living, what is the average family income in this particular area, and could we afford someone to be able to do that as a standalone? Because a lot of times, and this is being very candid, is typically even the pastor's wife is serving in a capacity, even though they may not be directly employed by the church. They're
Yeah.
helping support their husband, and in this case, really making sure that they're able to serve in different capacities to help serve and support, that they are to an extent kind of like a pseudo employee. And so we know, and this is where what's been nice, and I've seen this a lot, is a lot of these other denominations are also providing their own type of free data. It's not the cleanest. So this is where part of it is essentially saying, like, what differentiates some of the things we do from our executive comp studies is we're doing more sophisticated calculations and all. It's not meant to be a shameless plug, but there is free information out there now that people can look at, but don't let that be just the finite, oh, this shows that in this particular area, the average income is 50,000. Then that means we're going to pay our pastor 50,000.
Yeah.
That may not be the case. We have to think about, okay, it could be starting point of 50,000, but what additional benefits can we do as well? Because in an area where you're trying to find a really good pastor,
Mm,
you have to also be somewhat competitive. And that
yeah.
means that what kind of things, if it's not just cash, can we provide that provide some level of benefit that makes it where it's great to not just attain, but also retain them too. And so there's a lot of those things now. There's free things. You just go on a web search for church pastor salaries or position salaries, and there is data. Use that as a kind of like a way to triangulate what makes sense. But this is where part of it is being able to just consider what could be some peer data that could be useful, because it is a sensitive subject, right? You even think about probably most congregations don't know how much their pastor makes. It's typically like the HR personnel committee and then maybe the finance committee, but a lot of times it's pretty confidential. And so part of it is as a church is saying, well, if we're being so private about this, we're never going to actually get some outside data unless we're willing to find some way to share it in a way that is private, but then also allows us to get some insights on fellow size churches too.
That's really good. That's really good. And the hard part with reasonable compensation, especially in a church setting, is that it's all in the eye of the beholder.
It
You
is.
got someone who makes 50K and they're like, reasonable, 50K. And you got someone who's maybe a business owner or something like that, and their definition of reasonableness is going to be
A
radically
little bit
different.
different, right?
So
And this
yeah,
is
it's
where
important.
I think about it, Chris. There's a lot of times people forget that even in a non-for-profit and a ministry setting too, as well. I think to an extent, and this is just my own thoughts opinion, is that being in a nonprofit can be a lot more heavily regulated than an actual for-profit, like a private company that is a public kind of for-profit organization, because of the fact that you do have the benefit of being tax exempt, and therefore the government is going to expect that you're staying above reproach. And that's why these little nuances, more than not, probably aren't the same types of conversations you're going to see in the boardroom of a private large company or even a publicly traded company. They have their own regulations, but to an extent, I think ministries and nonprofits are pretty heavily regulated, more than people think they are.
Yeah, yeah, I would agree. I would agree. And if you're an organization that files the annual Form 990, that information return, then you know you've got to put sometimes your highest compensated employees
Yeah.
and their compensation on that Form 990, which is an interesting thing. So to
It
your point
certainly is.
about like that extra accountability, for sure.
Well, I'm sure, hopefully some of our folks are still awake. I think this is very interesting. I want to, as we start to land the plane, realizing, time flies when you're getting to talk about
Oh my
taxes. Can you
gosh,
believe that,
doesn't it?
Chris? I want to make it even more interesting, Chris, with some of the unique questions we have received. And I don't know if you want me to start, and if you want to get your thoughts on it too, or if you want to start as well. I'll give you the honor, sir, as our tax leader here in terms of understanding and knowing more about taxes than me. That's for sure.
I when you sent that email about, hey, let's
Yeah.
talk about the most insane or the unique things that we've seen. It was like my brain did that thing where it just jettisoned all information,
Yep.
and I was like, okay, what have I seen out there? Have I seen some crazy things? And I'll tell you this: this is not especially um, big. We're not talking about big numbers, but I think
Yep.
it does kind of illustrate some of the generational divide that can sometimes happen within churches,
Yep.
and making sure that you're having clear communication. So the story will illustrate both of those
Yep.
points. So I was talking with an executive pastor. He was probably a man whose age starts with a 6, so he's probably in his 60s, right?
Sure.
Really great guy. He'd been in the biz for a long time, and and we were talking about accountable expense reimbursement plans. And this church had one of those. They had people that would oftentimes not turn in their receipts on time or ever, and just sort of expect that, hey, I swiped my church provided credit card, I don't need to provide a receipt, it's going to be fine. And the biggest offenders were, and I hate to say this because they always get a bad rap, but it was the youth pastors. It was the youth pastors of this church. And the other thing that was happening often was that they were going out to eat a lot, because these people eat, Chris. These people eat all the time, and I'll tell you this: there are some days where if I see Chipotle come across on the credit card statement just one more time, so help me. I'm so sick. I'm so tired.
We're
of
gonna have
seeing
a different
Chipotle.
come to Jesus moment. That's for sure, right? Is what you're saying?
That's right. So I don't know if Chipotle had just opened in their area or whatever it is. I like Chipotle too; it's great. But evidently, this congregation or these staff members love Chipotle. But he just couldn't quite understand why they were going to eat all the time. Now we get it, right?
Yeah.
If you're in ministry, like, you probably don't want to have every single meeting on the campus, and so you want to go off campus. And what are you going to do when you go off campus? Well, you're probably going to go to a coffee shop, or you're probably going to go to lunch. And so and if there's lunch available, might as well make a Chipotle, right?
Might as well.
So these ministers were doing that a lot. He didn't quite understand it. He didn't quite get it. He's like, what are they doing? And so we just kind of talked about that and wrestled with, okay, is there a valid business purpose to all these Chipotle meals? The answer is probably yes. You can make the argument. But he at the end, he goes, maybe I'm just a fuddy-duddy when it comes to this stuff. I just don't get it. And I was like, I can certainly appreciate that. Should they go to Chipotle as often as they do?
Probably not, but
probably not.
and even health wise, right? We're not a health podcast, but it probably wouldn't be good for you to eat fast food all the time. I know I travel a lot too, but you start even thinking about just from a perspective of churches are focused on relationships. We do the same thing. When you and I are going to conferences, or if we're at a client site, we go to lunch. Typically, my goal has been to try and have lunch with someone else, because nothing really beats that level of connection than breaking bread with someone else and just not even talking about work, but just getting to know them.
That's right.
A lot of times youth pastors are very relational focused. And that's where part of it is just trying to make sure, hey, do we understand why there are these lunches and all like that? Sure, maybe there's got to be a balance. Maybe not every day you're going to Chipotle or Starbucks or any of the other fast foods, but we get that there's that relational component too as well. So
yeah.
Well, I guess I could share. I'll see if I go one by one on some of these ones, right? So I had received one. This was a while ago, and this was a pastor that was about to go on sabbatical. And during the 2 months, they had reached out and they just said, "Hey, can I claim my Disney trip as a business expense?" And I had to pause for a second and just be like, "Well, immediately I was gonna." Yeah, ultimately no, but this is where I just want to say I had to pause for a second by saying how are they going to justify, right? They essentially said in their mindset that it was their way of going to not just be rejuvenated, but to use that time to do vision casting about the different people around the world that are lost, and what better place than Disney, where everyone else comes in from all around the globe. And I said, that's absolutely creative. I got to give him A for creativity.
That's
But
right.
I had to
Effort.
really, yeah, effort. But I had to really emphasize in the same saying, like, can you yourself fully justify that as a business expense, that you're truly not doing that for pleasure, but doing that truly for business? Are you truly spending the majority of your time actively scouting? Sure, people watching, right? Are you scouting out? Are you talking to people? Are you sensing those things? Like things that ultimately at the end of the day, you're saying, well, I'm not going to say, what you're doing is very bad, but this is where part of it is saying, like, let's step back and say, is this the wise thing to do? Ultimately, the answer was no. And they got to their answer about that. But this is where part of it is sometimes they just want to think through, could I potentially do that? Right. Because a lot of times people think about their taxes, but how can I minimize my tax exposure in this? And could this be one? Well, for this one, I would say no. And so I don't know what you think, Chris. You may be completely wrong. You might say, Ken, you're completely wrong. That time
you're
there
totally
is so
wrong.
important.
I do all my business meetings at Disney World. Man, how amazing would that be? That'd be a lot of fun.
I know, right?
No, you're absolutely right. But it points up a bigger issue that we see a lot in the expense reimbursement space. Like, what's the line between a personal expense versus a ministry expense / business expense? And those things that are kind of on the bubble. This one's not on the bubble. This one's clearly personal. But I had one client who came to me, and she was like, "Hey, as part of my job, Chris, I have to get up in front of the cameras a lot and do a lot of interviews with some 3-letter networks that you would recognize."
Sure.
And so I gotta look good. I gotta look good. So what about my wardrobe? What about my makeup? What about all these other items? Like I have a daughter, and so I kind of know a little bit about makeup, but man, she was throwing out some terminology. I was like, I don't even know what that is. So all these beauty products and that kind of stuff. Would those be things that could potentially be reimbursable on a pre-tax basis? And the answer is most likely not. Sometimes people feel like, hey, but I bought this suit, or I bought this really nice dress for this particular interview. The IRS, it has very strict rules when it comes to uniforms, quote unquote. I mean, it must be one of those things that you can only wear for the job.
Sure.
So, I mean, unless it has like, Costco written on it, on your suit or on the dress itself, then chances are it's not going to be something that you can actually have reimbursable on a pre-tax basis. Same goes with makeup and stuff. I'm like, listen, I get it, but that's going to be your makeup. It's not like it's going to be you just use it and then you just give it back to the organization, but rather it's something that it's yours.
Again, it's that whole uniqueness of just these questions. Again, we try our best. We're not making fun of anyone here, but it's just these are the things we go through, and we have to do it with a straight face, because again, we probably see so many different scenarios that typically a church may not, and that's why they ask these questions, right? And I guess I'll preface on this one. My wife and I would always love to have a future homestead, right? It all starts with sourdough. And that's where eventually, maybe if the Lord allows, we'll have a little homestead and raise some chickens. But this is why I thought about this question. Is this came from a local church, and I was speaking at a local area, a local church seminar, and someone came up because we were talking about expenses, and the person was so sweet. And they did say this with a straight face, is saying, so we have a weekly potluck, which I'm all for. I grew up that
Amen.
way. I love potluck. It could be a Midwestern thing, could be a Southern thing. We love our potlucks. Don't get in the way of it. Come 12:15, we are getting that set up, whether you like it
That's
or not,
right.
Pastor. Well, they said, they asked me if I raise chickens for the church potlucks, is that a business expense? And that was one of the ones where I had to pause for a second to be like, wow, that is creative. But unfortunately, the IRS does not recognize potluck farming as a trade or business in this case, and so therefore, I think you should probably just approach it and say it may not be worth the time and effort to try and justify the chickens for the potluck lunch, and consider it more so as just, hey, this is a mutual benefit for all of us here, and it's meant to be a time of fellowship, right? So,
That's right.
oh yeah.
That's right. Oh my goodness. Oh my
Well,
goodness.
maybe
Yeah,
you have
that's
one more, Chris. I have one more just in case. I know we're using a lot of time, but I want to make sure I give you some time to think of maybe one more too.
one of the ones, and this is not a crazy story, but it's
Yeah.
one that I'm seeing more and more often, and that is that churches that have like really well functioning and delicious restaurants that are
Mm,
actually on
yes.
church campus,
Yes.
right? And I've had this now 3 or 4 times that I've seen churches that like, and then they're like on the church grounds, they're open to the public. Um, and is that going to be considered unrelated business taxable income? And it's so fascinating because many of these churches, they're using it as an outreach to the community, not only bringing people into the church and saying like, hey, you're on a church ground, but have a delicious hamburger too, but also the people that they employ are sometimes people who have criminal records
Sure.
or
The
otherwise
tarnished
not.
past.
That's right, they're not otherwise as employable. Maybe there's some addiction and mental health issues that are in the background, and so just giving them that safe place to learn how to show up on a daily basis and that sort of thing, near and dear to my heart. I love it. um, is that going to be considered an unrelated business? And the answer is it depends. So if you can show that this is really aligned with the way that you do your operations and the way that you do your exempt purposes, there's a slim chance for showing that maybe it's not an unrelated business. But man, 9.9 times out of 10, that's going to be an unrelated business
Problem.
for which you
Yeah.
have to pay tax.
It's and that's where, again, this is where as a church you start thinking about, you want to be the focal point for the community to come together, and what great way then to be able to
Yeah.
provide those opportunities, right? But this is where we're just trying to say we want to stay above reproach, and whether it's at the church doors or even it's back at home. I think of just one more situation I had as well, and this is where part of it is just going back to what's deductible and what's not. And this pastor did ask me that, of course, for this particular church, baptisms are a big deal too, as well as it is for my home church. But they did bring up the question of, if I baptize people in my pool, can I deduct the pool, right? And again, give them kudos for creativity, give them the ability to sort of consider asking that question. At least they feel comfortable asking it. So I say creative, yes; deductible, no. And that's where, again, we just want to be able to have this as a time for us to say, look, there's no such thing as an unwise question. We'd rather you ask us that question and we can walk it through with you, rather than you suddenly make those assumptions and then now you're dealing with having to justify it with the IRS, which probably already knows the answer and is trying to see what kind of ways you're going to come up to justify something that probably is not going to be held up. And that's why I enjoy these types of conversations, Chris, is just the ability for us just to be able to be that sounding board, because of what we've seen before with other churches and their experiences too.
Well, it really is a privilege and honor to be like a trusted advisor for a lot of these ministries, knowing that they're out there trying to do some really important work, and we just get to come alongside and provide that kind of nuanced expertise that they really need in order to stay out of hot water,
Yep.
and focus on the work that really they're intended to do.
Well, this is one of the things I've always enjoyed this time we have together, Chris, and it's definitely been a fun time, even spending over an hour on taxes. It's something where I know this is something that's relevant for our pastors, our leaders. And our hope is, we'll probably have some more episodes on this in different ways, shapes, or forms too. So
Yeah.
appreciate
Yeah.
you, Chris. Always enjoy this time with you, sir.
Likewise, Ken, always a pleasure. And, hey, maybe next time we'll have a part 2 about some even crazier tax things, because I'm sure this is going to be like a scintillating episode that people just can't get enough of. So I
Probably an
can't wait to talk
evening,
about.
an evening session brought to you by Depends, right? As you can tell, we're really leveraging to get some sponsorship, which we probably will never, but again, always, at least we're having fun, right?
That's right. That's right.
Awesome, Chris. Well, hey, man, have a great day. Appreciate you. I can't wait for our next episode together.
Same to you, brother. Take care, man.
This is not a CPA firm. Assurance, attest, and audit services provided by Cape & Krause, LLC. Carr, Riggs & Ingram, and CRI are the brand names under which Carr, Riggs & Ingram, LLC, CRI Advisors, LLC, and Cape & Krause, LLC, and CRI Cape & Krause Advisors, LLC provide professional services. CRI CPA, Cape & Krause CPA, CRI Advisors, Cape & Krause Advisors, Carr, Riggs & Ingram Capital, LLC, and their respective subsidiaries operate as an alternative practice structure in accordance with the AICPA Code of Professional Conduct and applicable law, regulations, and professional standards. CRI CPA and Cape & Krause CPA are licensed independent certified public accounting firms that separately provide attest services, as well as additional ancillary services to their clients. CRI CPA and Cape & Krause CPA are independently owned CPA firms that provide attestation services separate from one another. CRI Advisors and Cape & Krause Advisors provide tax and business consulting services to its clients. CRI Advisors and its subsidiaries, including Cape & Krause Advisors, are not licensed CPA firms and will not provide any attest services. The entities falling under the Carr, Riggs & Ingram, or CRI brand are independently owned and are not responsible or liable for the services and/or products provided, or engaged to be provided by any other entity under the Carr, Riggs & Ingram, or CRI brand. Our use of the term CRI, we, our, us, and terms of similar import denote the alternative practice structure conducted by CRI CPA, Cape & Krause CPA, Cape & Krause Advisors, and CRI Advisors as appropriate.